Today we will be reviewing a case study on implementing tax strategies. So before we jump in, I do want to let everyone know that this session is being recorded, and we will send you a copy of the recording directly to your email. We will also be doing a live Q&A at the very end of this session, so please feel free to ask questions throughout using that Q&A section in Zoom, and then we'll run through them at the very end. And then if we don't have time to cover your questions today, our team will follow up shortly after this webinar to make sure you get an answer to all questions. So just want to preference that. We have a lot of people here today, and I just want to make sure that we can answer everything, but if we don't get to it, we promise to follow up directly right after the webinar with that answer. So with that being said, tax-efficient investing and tax-smart withdrawals are two crucial components to any successful retirement plan. And with RightCapital's tax strategies module, you can quickly identify which tax strategies will provide the most value to your clients and clearly demonstrate the value with engaging visuals. So I am going to jump into the client plan I'm going to be reviewing today, and that will be the Adam and Jackie Smith plan. So before jumping into the tax strategies tab itself, I do want to go to the profile section at the very top right of my screen, and then to the blueprint, which is just a visual of all the data entry points. I just want to quickly review the client plan so you're familiar with the case study that I'm presenting today. So here I'm in the client's blueprint in the net worth section. So just a quick kind of overview of the client plan. Adam and Jackie Smith are both 62. And then here's just a quick overview of all of the data entry points that I've entered in their profile net worth section. So here we can see the investment accounts. They do have a home entered, a mortgage, a little bit of debt, and then just some other assets like a car. So very straightforward client plan here. Again, all their investment accounts are here with a total net worth of around 2.3 million. So just gonna quickly overview that. And then we are gonna spend a majority of the conversation today in the tax tab. But again, quick overview of the client plan. Adam and Jackie, both 62. We have some investment accounts entered, and then just the typical other data entry points for most client plans. So moving on to the tax tab. So the tax tab is located kind of top right of my screen, right next to education. So I'm going to click into tax, and then right below that is our tax strategies tab. So the first tab that I'm going to start off with in today's presentation is actually the strategies tab on the far right of this module. So on the right-hand side of my screen, there's 5 tabs, and I'm going to click into the one on the far right, which is strategies. So it can sometimes be difficult to know where to begin when implementing tax strategies, especially for prospects and newer clients. So in this case, the strategies tab can be used to automatically calculate the top 5 strategy combinations to help maximize a client's ending portfolio value. So when you first launch the tax strategies tab here in every client plan, you'll see this blue button that says solve for top strategies. So all I have to do is click that, and then it will run through a lot of calculations on the back end to give us those top 5 strategies. This is doing a lot of math behind the scenes. So if you have a client who's married filing separately, that it may take a little bit longer to load, but typically it's within the 5 to 10 seconds range. So if it's taking a little bit to spin and give you an output, it's just running through all those calculations. So here on the top strategies, I can see on the left-hand side the tax-adjusted ending asset, and then I can see the 3 outlined strategies, one being the asset location strategy, the withdrawal strategy, and then the Roth conversion strategy. So this, I want to jump into actually what those 3 are, so asset, withdrawal, and Roth conversion strategies. So right down below, I'm going to click into those blue action items. And then here we can see the 3 outlined strategies. So starting off with the asset location strategy, this grants you control on how a client's equities are allocated between the 3 tax buckets, being taxable, tax deferred, and tax-free. So put differently, you can choose how the equity portion of the client's overall asset allocation is spread between these tax buckets. So the default asset location strategy in RightCapital is pro rata. So this option allocates a client's equities evenly across the 3 tax buckets. So additional strategies would be taxable, tax-free, and tax-deferred, and also tax-free, taxable, and tax-deferred. So again, I'm just gonna kind of go over that again. It's allowing you to see how the taxable, tax-deferred, and tax-free buckets are kind of the overall equity allocation for those three buckets, is a better way to put it. Again, our default in RightCapital is pro rata, so it's a split equally between the three tax buckets, or you can show the client the impact of these other two strategies. And then I'm just going to go up. So up next is the withdrawal strategy. And then if I scroll down to the action items, that is our second strategy listed. So this allows you full control over which tax buckets are pulled from when funding a client's negative net flows. So this strategy ties into our withdrawal sequence setting in RightCapital, and it serves the same function. So the default withdrawal strategy in RightCapital is to pull from the taxable, then tax-free, and taxable, tax-deferred, and lastly tax-free. So when funding the cash flow needs, RightCapital will default to taking money out of the taxable accounts, then go into the tax-deferred accounts, and then lastly tap into the tax-free. So I can also in this proposed strategy column show the clients the difference. We have lots of options here. Again, pro rata is pulling proportionally, and then the rest of the options are kind of as they show. So taxable, tax-deferred, and lastly tax-free. So lots of options there. And then the last strategy is the Roth conversion strategy. So that lets you choose a conversion target and then fill up to a specific bracket for Roth conversions. So this is a really quick and easy way to identify Roth conversions and if it is a good fit for the client. So we're going to jump into the action items throughout all of the tabs here, but just wanted to quickly run through what those three strategies are truly doing. So this is the first step in the client plan. So I should say this two different ways. So strategies is going to kind of be the solve it feature for this module, and it's going to go through and give you the top tax adjusted ending assets, and then it will show you what strategy would have to be selected in order to get that result. So just an easier way as like a solve it versus going through each tab and then manipulating the action items that way, which you can do that as well, but this is saving you a little bit of time doing that. So that's the first tab here to go through the solve it. If you make any adjustments within the client plan and come back to this module, you'll see a little notification that says some components in the plan changed, and then you just need to reload so we can rerun that calculation. So that is the strategies. So for example, if I wanted to actually input a proposal of the first top strategy I see here, I would then just match the asset location, withdrawal strategy, and then the Roth conversion strategy. So in the action items, I'd make sure it says taxable, tax-free, tax-deferred. And then up next in that withdrawal strategy is taxable, tax-deferred, tax-free. And then lastly is the Roth conversion strategy would be filling the clients up to that 32-33% ordinary income bracket. And then here we would just move that, fill up the tax bracket slider up to that specified amount. And then all I have to do is press that refresh button, and then that will flow over to all the other tabs where then I can see the awesome visuals to kind of show that story. So that is the strategies. And then I'm going to hop back over to the summary tab, and then we're going to work our way back to that strategies. So first up is the summary tab. So this serves as the home base. So it's highlighting the most important differences between the proposed and the reference strategy. So again, down below in the action items, the proposal is what we're making a change to, and then the reference is that initial strategy before we made any adjustments to the plan. So this chart here is going to display the value of the proposal in terms of the tax adjusted ending assets, the federal taxes paid, and then the tax deferred withdrawals. So I can hover over each aspect of the chart, and then I can see this specific number there. So same thing with federal taxes paid. I can see that direct comparison by hovering over, and then also the withdrawals from tax deferred accounts. So super helpful information here. And then on the right-hand side of that visual, this is also a nice talking point with clients, is to show them just the dollar amount of tax adjusted ending wealth, how much more or less you're paying in taxes and then how much you're pulling from those tax deferred accounts as well. So that is the first graph. Again, this is the home base, highlighting the main differences between the proposed and the reference strategy. And then here, again, tax adjusted ending wealth, federal taxes paid, and then the withdrawal from the tax deferred accounts. And then up next, so in this visual, whenever there's a graph in RightCapital, I always say pay attention to that little downward arrow next to the title of each visual in RightCapital, because we typically offer more than one graph that goes into even more information. So up next is the asset location. I'm going to switch over to that. And then here is a really good visual of that asset location action item that we went over before. So this shows how the client's equities are allocated between the 3 account buckets. So again, just a really nice visual to explain that first strategy, that asset location. So those are the 2 main sections in the summary. Again, home base, great visuals, really nice talking points with clients based on what you're doing in the action items down below. Awesome. So up next is calibration. So this is going to provide insights into where the clients fall in relation to various tax bracket thresholds. So the federal income tax, capital gains, and IRMA based on those Medicare premium adjustments. So again, if I am going into that graph, that little arrow, we can switch between ordinary income tax bracket, key tax components, the capital gains, and then the Medicare premium tax bracket as well. So I'm going to stay here for right now and go down below into the action items. So I'm going to scroll down and I'm going to reset my slider for the Roth conversion strategy back down to none and just refresh. And I just want to start over in this module to show you the impact of filling up that specific tax bracket. So here we go. I just refreshed my screen, the calibration tab. This blue is showing the adjusted taxable income without a conversion. So right now, this is just where the current state of the plan stands. And then down below in the action items, I can then show the impact of filling up that specific tax bracket. So what we're doing is moving that slider, let's just say to the 12% tax bracket. Again, just pressing refresh at the bottom right. And then here I can see that that green filled up where they have the opportunity to do a Roth conversion. So whenever you see that green fill up in the tax bracket, that means they were below that specific bracket and have room to do a conversion. And then right to the right of this conversion graph, it will show you is that ending in more or less ending assets compared to that reference strategy. So again, in real time, I can go back down to those action items. I can change all 3 of those strategies, but typically I'm in this module looking at filling up the different tax brackets to see the impact of Roth conversions. So again, I'm going to move that slider. Let's go up to the 22% bracket. Again, pressing that refresh. And then here I can see, does that give more ending assets or less, or what is the true impact if we were to fill up to that specific bracket? And then we can see again that green is filling up to that specific bracket. And that blue, again, is adjusted taxable income without doing a conversion. And then again, just hovering over each section of the graph. The graph here, the lines going through it are the different tax brackets, just to easily identify throughout the length of the plan. And then again, I'm just going to do one more example, filling up the tax bracket again, realizing with the entire length of the plan, can we fill up to that specific bracket? When can we do that, signifying a Roth conversion? And looking at the right-hand side of the page to see, is that more or less, or the true impacts of making that adjustment? It's also very important to note that RightCapital will automatically look for any part of the planning projection to take advantage of a Roth conversion. But if you wanted to control the years, we also offer that option. So right next to the refresh button, there is an edit. And if I click into edit, I can select the conversion starts and when they end. So let's say you're talking with this client and they are not interested in doing it anytime soon, and they want to say, I don't want to do that until age 65, or maybe you're looking at the graph and it doesn't make sense yet, but you have complete control over when the conversions start and when they end. Going back there. That is really how advisors are using this tab. And then also with the calibration, clicking on that downward arrow, looking at the key tax components. Again, this is all interactive, so you can hover over each year of the planning projection, and then you can see salary and other income, investment income, taxable Social Security, taxable pension and annuity, if applicable, and then any withdrawals from the tax deferred accounts. That's helpful there. And then again, moving over to the capital gains tax bracket, similar concept. And then lastly is looking at the Medicare premiums. So again, just very helpful, very easy to have that conversation with the client with very helpful visuals. So that is calibration. And then up next, we're going to move on to comparisons. So right to the right of that, again, this is very useful to show all the key visuals to the client. Again, in that title of the graph next to invested assets in the middle of my page, just clicking on that drop down, we have a lot of visuals here. So this is the best place to compare your proposed and reference tax strategies. And there's 6 charts available. So a lot of comparing and contrasting. One of the most popular tabs here is the total and federal tax paid. This is just a great visual, again, to have those conversations. So we have a difference in invested assets over time. Then we have our federal tax paid. We have our RMDs. So this is another really helpful one. And then tax adjusted ending wealth. This is another really great visual. On the left-hand side is our proposal. So in this example, we are filling up to that 24% bracket. Again, the action items are, you can always make adjustments to them and press refresh, and then whatever visual you're on will automatically refresh as well. So if I fill up to that 32% bracket, I can then show the impact. 95% of the portfolio would be tax-free, and this would be the ending portfolio value, versus our reference strategy that is not outlining Roth conversions would be 0% tax-free, and that would be the ending portfolio value. And again, just moving that slider back down, pressing refresh. And you can always come back to the referenced top strategies as well if you wanted to go back and manipulate the action items to show that top strategy again. But you have the best of both worlds, where either using the top strategy or exploring the action items to see what fits best for the client. And then also the withdrawal is a great visual. Again, all interactive. So each year of the planning projection, you can look at that visual. And then lastly is the account balance over time. So that is our comparisons tab. And then the details tab is really that number approach. So it kind of follows what we see in our cash flows in the retirement section. So this is just breaking things down into a specific dollar value, and then it's just tracked through the future projection. So here I can see conversion amount year over year to get us to that point. Again, it's all reflected what we just did in that proposal, so filling up to the 22% bracket. And then year over year, I can see what is the client pulling from their taxable account, their tax deferred account, their tax-free, and then just the balance over time as well. And then at the top right of the details tab, we can switch over to see the cash flow view of the tax details, Medicare premiums, and then the asset location summary as well. So switching over to the tax details, adjusted taxable income year over year, total federal tax paid, the tax bracket, and then also the capital gains tax bracket. So again, a lot of what we see in those visuals just translated over to a cash flow view. And then also looking at Medicare premiums. So it's extremely important to note that if you are in the tax tab and you're in the details and you're looking at the Medicare premiums, if you're looking at this view and you do not see any numbers for a Medicare premium for the client or co-client, it's extremely important that you navigate back over to the profile section at the very top right. And then if you go into the goals, and I'll show this one more time. I just want to make sure that I'm super clear in this because it's very important to get information to feed back over to that tax tab. And then in the annual retirement health cost card, you have to be using the detailed estimate. So our default is to use the national average. But if you switch over to the detailed estimate, this is where you can map out pre-Medicare costs and then Medicare Part B and D are automatically calculated by RightCapital. And we just need the detailed estimate to be able to run the calculations in the tax tab as well. So I'm just going to go back and show that one more time because it's a super critical part of the tax strategies. So if I am in the client's plan, I'm in tax strategies, and then the details tab. And then on the top right of this chart here, if I click on the withdrawal and conversions dropdown and go into the Medicare premium section, if you do not see a Medicare premium for the client or the co-client, it's important to go back to their goals section and switch over to a detailed estimate. So I'm just going to show those steps again. So I would go to the profile section and then the goals right to the right of net worth. And then you'll see the annual retirement health cost card. And if I click into it, our default is the national average. You just want to click on that for both the client and co-client and switch over to a detailed estimate. And then again, the reasoning behind that is because RightCapital will automatically calculate the Medicare Part B and D premiums year over year. And we need that specific calculation to show you the output in the tax tab. So we have this all in our help center too, but I always just like to really hit that home that make sure the detailed estimate is turned on. And then a lot of advisors will go back out to their advisor portal and then just make adjustments to their global settings. So moving forward, you don't have to make sure that it's using the national average. It's just always using the detailed estimate. So I can show that at the very end as well, but just saving a little bit of time, just making sure all clients are using the detailed estimate. But if you'd like to use the national average, you totally can. Just know that that information will not import back over to that tax strategies. Awesome. So again, retirement healthcare costs. And then the last caveat here, if you do not see this card, it may have been deleted in the data entry for whatever reason. So you would just click on add goal, and then you'll see it under retirement. And then you could just add that card right back in. Awesome. All right. So going back into tax and then tax strategies, and then the details tab. And then the last thing here is that asset location summary. So again, same concept as those visuals, but just in that cash flow view. And then whenever you see this little icon next to the asset location summary, that just means you can download the table into an Excel file if you would like that. And then whenever something is underlined as a header in the cash flows, you can click into it for more detail. So I can click into that taxable account equity and then just see which accounts are showing us that taxable account equity. So just it will show you each specific investment account that has been entered. Awesome. And then we are back to the strategies tab. So a lot of advisors will start off here, letting RightCapital kind of run the calculations to show you the top strategy for a tax adjusted ending asset. And then the top strategies will be listed here. And then you can use the action items down below to match it to that specific strategy, or you can click through each tab and then just make adjustments to the action items how you see fit. But again, equity allocation, the withdrawal sequence. So how are we pulling from the client's portfolio to fund negative net flows? So whenever we have negative net flows in the plan, are we pulling taxable, tax deferred, tax free? Or pro rata, for example. And again, pro rata is proportionally across the 3 tax buckets. And then we have just different options here. And then the conversion target, filling up the specific tax bracket, is just looking at in any year that the client is beneath that specific tax bracket, is there room to do a Roth conversion? And then in that Roth conversion strategy, you can also look at the capital gains tax bracket. And again, just filling them up to the respective percentages, and then also that Medicare premium tax bracket. And then estimated terminal tax rate. So by default, you will see a percentage in here, but this is a tax rate on the heirs. So for example, let's say in this client plan, there was, let's say $100,000 left over in the client's tax deferred bucket. This is the tax rate that is the rate we would be taxing that tax deferred portfolio that's left over. So this is not directly impacting the client or co-client, it's their heirs. So you can always hover over these little information marks and it just goes through what that is in more detail, but it's the tax on the deferred accounts at the end of the planning projection. So this is kind of what the impact would be on the client or co-client's heirs who get that tax deferred account. And you can, again, make adjustments to that slider, press refresh, and then the whole module will update. So our default is 15%, but you can always make adjustments. And press refresh. All right, and the very last component of our tax strategies conversation today would be applying the tax strategy into our retirement analysis. So right now, as it currently stands, this tax strategy is a standalone module. So any adjustments I make here to the client plan is not impacting anything else in RightCapital. But we do offer we can actually tie this into the retirement analysis if we'd like. So if I go over to the very middle of the page and click on the retirement tab, and then in our analysis section, in our probability tab here, if I scroll down to the middle of the page and click on the action items, on the right-hand side, we have all of our strategies. And then towards the bottom, I have the tax strategy. So if I click on this current strategy dropdown and select tax proposal, it will bring over that proposed proposal we built out in tax strategies and then put that into the proposed retirement analysis. So then it can run through the Monte Carlo trials and I can see the true impact on all the other variables in the plan directly in the proposed plan here. So again, I'm just going to run through that one more time. So let's say I worked in the tax strategies module in either a client presentation or just working with the client. We come up with a solid proposal in this module, so in the tax strategies. And then if I go over to the retirement tab, and then our default page here is the retirement analysis. And then if I scroll down beneath the proposed and current plan and click into the action items, and then on the right-hand side under strategies, you'll see tax strategy. And then if I click on that drop-down, if I select tax proposal, that will bring over all of the proposed columns into this module and run it through the Monte Carlo trials. If you do not see tax strategy listed in the client's plan under the action items and strategies, you just have to click on the edit button to the left of refresh. And then if I scroll to the right-hand side of the page, we will have all of our strategies. So you might have disabled that strategy, but I can check that off and then press save. So that's automatically checked here. But if I didn't see it, I would just check it off under tax strategy and then press save. So again, if you do not see tax strategy, just click on that edit. And then on the right-hand side of that drawer, you will then see strategies. And then now we have our tax proposal in our proposed plan. And then you can use all of the visuals in the retirement analysis, and that's being now incorporated into that proposal. And then if you wanted to isolate that tax proposal just in its own proposed plan where you don't want to change any other variable and you just want to compare the current plan versus the proposed plan, on the right-hand side of my page, right next to current plan above the 100% and the green bar here, I can click on the little pen and paper icon, and then I can do add or remove plans. And then at the very bottom left, I can click add new plan. It will always default to say new plan. You just have to click into it. You can title it whatever you'd like. So if I wanted to do just a Roth comparison, I'm just going to name it Roth. Press that blue checkbox, press OK. And now on the left-hand side of my page, I will, right above the 100% on the proposed side, I can click on that proposed plan dropdown and then switch over to the new plan I created, where now I just want to isolate that tax proposal into its own proposed plan. So that again, in the action items down below, under strategies, under tax strategy, click that tax proposal and then press refresh. And now I'm not making adjustments to any other action items. And the true difference between the two plans would be doing the Roth conversions and not doing it, or any other variables that I looked at in the tax strategies tab. So very helpful. A lot of advisors will build out the proposal. Again, the tax strategies is a standalone module. So all the work you're doing in the action items and making proposals and making changes are not impacting anything else in RightCapital until you bring it back to the retirement tab. And then you can use that tax strategy option in the proposed plan to see the difference and really run it through the Monte Carlo trials. So super helpful there. And then the last point I just want to make is in our report section. So in the very top right of the screen, I can click on the gear icon and then go into the report tab. And then if I scroll down towards the tax, we do have our tax strategies and it is underlined. So I can either check off the entire module to include, or I can click into it and then specify which portion of the tax strategies I'd like to include in my deliverable. So if you don't want to include everything, you don't have to, but I can check off everything. And then I just want to show you what that will look like because it's really a direct kind of carbon copy of what we see in the module today. So under tax strategies, scroll down, download the selected pages, and then all of that information will translate into a report deliverable. And then just scrolling down, I just want to show you a couple pages of this, just so you can see it's really a direct carbon copy if you are presenting to the client and then you want to give them this as a deliverable, or if you run the Roth conversion proposal and then give them this as the deliverable or present through this, it's really a direct carbon copy of what you see in the module. And then just one more page here, again, just outlining the action items and then all of the other helpful visuals.